For more on Saks and the retail sector, we're joined by Lori Wachs. She's the founder and president of Cross-Ledge Investments. Lori, good to see you. And Carlos Slim saying nope to $11 a share, but looks like eventually it might be sold.
Well, Saks seems to be the perennial takeout rumor in the retail group. There were strong rumors a few years ago, coming from much more credible sources than this one newspaper, that the company was going to go in the low 20s. And, you know, given the roller coaster ride that it's been on, Saks seemed to be staging a comeback. Now it looks like that luxury group is starting to roll over again. Probably a little bit too much uncertainty, and they certainly wouldn't get top dollar in this environment.
Really? I thought the CEO was doing quite well with it. He was cutting costs, and comp sales are doing well, though, no?
They have been, although their earnings power still isn't back to anywhere near peak levels. And again, we're starting to hear signs that luxury has started to slow down. Okay. We've heard it from a bunch of their competitors. The MasterCard numbers out this morning showed luxury down 1% in August, which is a sharp reversal from where it's been. But
getting back to Saks itself, though, the stock is trading, I think, around a little less than $8 right now. Shouldn't somebody like Carlos Slim be happy that they would want to offer $11 share if that offer did come out?
Carlos Slim has quite a bit of staying power, and he's looking at this as a longer-term investment. Granted, he bought many shares well below where they are now, but again, given where the stock has gotten to in the past, you know, it was low 20s a few years ago, so I do think that he's in it more for the long haul and is looking to create more shareholder value here.
Right. Okay. Sticking it out with Saks. Okay. But let's broaden this out, Lori, to talk more about the retail sector, because we've been discussing, you know, how are back to school sales doing? How are they affecting technology companies? How are they affecting the retailers? What have you noticed that's been most interesting thus far in this back to school trend or the sales trend?
We're seeing that there's actually some decent mall traffic out there. Customers are going to the stores. They're just being a lot more discriminating in their buying. So you'll see mall traffic up 5%, but sales for the month looking to only be up about 2.5%. And that's definitely, it's a deceleration from where we've been. People are buying closer to need. You had a very hot month and not a whole lot of wear now merchandise because they sold out because things were so hot in the prior few months.
And that justifies the higher PE ratios that we're seeing in retailers. I mean, they're actually pricier than what the overall PE is for the entire stock market.
Just by a narrow margin. They're about in line, although based on their historical multiples, they're at quite a discount. They're about 20% off of what their long-term average is. Okay. So again, they obviously had a big run in the spring. Things have traded off. I think the group's down 18% since its peak a few months ago. So again, people are clearly aware that this is going to be a very telling time, and it's not looking all that great, unfortunately.
And the cheapest stock, Lori, that you think is going right now, the best bargain right now? Can you give us one?
I have a few names that I like. I'm not sure if they're necessarily bargains, but I like Urban Outfitters a lot. It's a great retailer, and they've proven themselves again and again in difficult markets.
All right, Lori, thank you so much. Good to see you, as always. Lori Wachs talking about the retail sector, the founder and president of Cross-Ledge Investments.